Alright guys, right, I'm going to keep this one quick because I realise that people haven't got time to sit and listen to me talk crap all the time, so we're just going to go through last week's trades, and it was a really quiet week, and the only reason I'm doing this is because I want to show people that not every week is a trading week. With the way I trade anyway, I'm not sure about lower time frame strategies. That I assume there'll be opportunities most days. So the reason I'm holding this microphone is because if I put it on the desk, because my PC's attached, underhung on the desk, you can hear the noise of it. So I need to get some sort of stand or something for the mic. Anyway, so last week I had a US30 sell. Quick in and out. It was a 50 fib and EMA there. If I drop to the hourly 50 fib, you can see it worked nicely. What else did I have? So I had the pound yen play on the Friday. Sorry, the dollar yen play on the Friday before, not last Friday, Friday before the sell, and then the buy from the trend line. So I had the buy and the sell open over the weekend, and then when last Monday came along, there was a big move down which took out my buy. So now I'm only in a sell. I took most of the trade out, and just left a runner just in case we get down here somewhere and I can look to take a buy then. So I'm no longer in a buy, unfortunately. What else did a cable buy? So I've already got a cable buy running from first the retest here, and then I've had buys from higher as well. So I took a buy on the Monday as well, and that was purely on the fact that I think we were here like so we were around this area from market open, well, all day Monday really, and then I just took the buy purely because Rishi Sunak, it became apparent he was going to be the only person in contention to be Prime Minister, and he's a financial man, so the markets would be more at ease with him than anybody else. So that was purely the only reason I took that buy. Was I've already got a buy to cover me lower, so it was worth it, and it played out really nicely. I think that was it for my whole trading week, really. There was something I was looking at on the Friday, and that was here, the level with the 200 EMA, but I called it a day before that and went swimming in the sea off North Wales, and it was freezing and got bit by a mosquito, one on my neck and one on my arm. Great. So, and I mentioned on Twitter on Friday as well about market flows, and Friday was that case because the US 500 was pushing high yet hard. The same for US 30, the same for Nikkei. They were all pushing, so generally I would just stand aside then, unless you've got them all coming to a level. And I'm not going to say I'm an expert at trading indices, because I'm not. I used Nikkei really just to line up for a yen pair trade, and I've recently started trading US 30 and US 500 because they're quite nice on tech. So I can't profess to be an expert, but what I do works. So that was my trading week. It was really quiet. Hopefully things will start picking up tomorrow with the new month. So, and what I just wanted to cover as well in this video is had a few people messaging me recently about they're struggling to see any sort of consistency or results. They're not profitable. If this is a perfect example. I've just seen a tweet there in front of me. You will never get better at trading by changing strategies. This is a fact, and it completely is a fact, because the way you should trade is you should get a strategy, either develop your own, which is, it's unlikely you're going to be able to do that. So you need to find somebody who's a successful trader and take the blueprint to their strategy. It might not work for you. Trading's all about finding a strategy and then making it work for yourself. And the way you do that is you chart up every pair, indices, metals, chart up everything, and then over the course of months you draw your zones of interest and you record what happens around them, and then every single confluence you need to have in your journal about every time this certain pair comes to this confluence or these two confluences together, you know what sort of reaction happens. So then you sort of build up a picture of the strategy, and then greed and fear comes into it and your own personality, and then you have to sort of mold the strategy to you so you're comfortable in using it. This I'm not going to tell everybody how to do that in this quick video, because it's not even worth me trying. It's a period of months and months, and I'd probably have to mentor somebody to teach them how to do it, and so people at the moment, these recently the people I've spoken to, they're frustrated that they're not profitable, but then they look for reasons why, and they feel like they need to learn more, another technical skill. They need to adapt their strategy a bit more. It just puts you back to square one, because if you're changing your strategy, all the data that you've got previously is now null and void, because you're not trading the same strategy anymore. So you're going to go through the same cycle with this new piece of technical analysis that you're implementing, which just doesn't work. So you have to stick to a strategy months and months and months, work out why it's not working, assess every single trade, capture the data about yourself, your sleep patterns, what you eat, what your home life is like, everything, your mood, even the weather. You just get every bit of data that you can possibly find, and assess yourself and work out how you can adapt yourself to make trading work. There's just most people have been attracted to trading for the wrong reasons, because they see people just talking shit on Instagram, posting. Most of it's bollocks, and people just want to, make money by selling shit generally. So you've come in thinking it's fast cash and easy, and you can do a few months learning, and then you can go ahead and make money from it. And unfortunately, that's not the case. You might make money short term, but long term, it just isn't going to happen unless you've got the right approach right from the start. And a lot of people come into trading and they go through that route, but then they realise that if they actually did have a good education, then they can do something. And that was basically the way I got into things. But I've always had sort of low expectations, and that's been a benefit to me. So sorry, it's just diverged a little bit there. I can talk when I get going about trading. So the other thing is people trade. So after people have been changing their technical approach, you've got then the other side of the coin, the other traders who blame their lack of fundamental knowledge for their poor performance in the markets. Unfortunately, that's just not the case. I can guarantee that I could go back through their trading plans and they would have broken their rules numerous times, and I could ask them why they took this certain trade and they wouldn't be able to tell me. They'll just say it's a zone of interest. I'll say, well, what does this type of zone of interest usually return for you? And they wouldn't be able to tell me that either. The fundamentals will just turn you inside out. Yeah, it's great to know what's driving the market, but it's more important to get your strategy right, create a plan, act out that plan, so execute that plan, and then on a weekend, after a week of trading your plan without breaking any rules, and then you look at the data and get everything out of that journal, and then you can adapt your plan going forward. I say not even, obviously you do need to review every week, but at first I wouldn't adapt the plan for a month, 2 months, 3 months. The longer the better. You just need to just create the plan and execute it, and then review the results. It's 2 seconds. Sorry, just got disturbed then. Yeah, so you can't blame the fundamentals. A lot of traders aren't put off getting into a trade by fundamentals. They use fundamentals to tell them when to hold a trade for longer or build up a position, so add positions at a later date when you've got a runner. I would what's more important than fundamentals is knowing when the market's in a flow state, so a risk on or risk off, and for that you just need to check on all indices and see if they're all moving together, and that's when I would pull a trade. So that is much more important than learning everything about fundamentals, which you're never going to do. And the example I give for that, if you look at all these websites like MyFX Book, FX Street, they all have their in-house analysts, and they all give an idea of what they think is going to happen to the market, and they're only right 50% of the time. So how are you going to be right 100% of the time? It's just not going to happen. And these are degree educated people in economics, so it's never going to work. So you just need to create a plan and trade your plan, and then assess the results. So you've really just got to put that into practice, because it's the only way you can succeed at trading. You can't just have a tough time and then think, oh, you need to learn something else, because that's not the case. The only thing you can learn about is yourself and how you execute in the market. So, I could talk about this all day, but if anybody's got any questions, just drop me a message or a comment on here, and I'll do my best to help. And that's it really. The week started off quite quiet for me today, so I'm looking at tomorrow really to get things going, and I'll come back on the weekend with a review of this week. Nice one. Trade safe.